Hey everyone, I'm Jeremy Szafron. This is Kitco News. Well, the Fed minutes from the September meeting have been released, revealing that all officials supported lowering interest rates. There remains a strong focus on balancing the risks of inflation and ongoing quantitative tightening. Some participants favored a more cautious 25 basis point cut, while others stressed the importance of ensuring monetary easing is gradual and predictable. Now, the Fed also noted concerns about premature easing, stalling the progress on inflation, while revising economic growth expectations downward for the latter half of 2024. Well, to discuss what this means for the markets and why he believes gold will continue its rally to 3,000 next year, we have E.B. Tucker. He's the editor of the Tucker Letter, joining us in studio here in Vancouver. E.B., welcome.
Yeah, nice to see you.
You finally came into the studio for a visit.
You be careful where you invite me.
Yeah, exactly. I was going to say, E.B., I want to talk to you briefly because I know that you just left Florida because there was a terrible storm there. And now we have, of course, Milton approaching Florida. It looks devastating for many. How are you managing through the situation?
Well, it's always fun when you have substantial property that's uninsured and you have storms, 100-year storms coming one week after another. But we'll be all right. I mean, I flew up on Sunday. I love it here. Hurricanes don't dare approach Vancouver. So This is a great place to go during the storm. Kind of like a storm refugee. Did you ever see the Larry David show where he adopted the Katrina family? I feel like that's why I'm here. That's going to be my next ask for you. Can we move in?
So we'll see you a lot more in the studio.
Probably, yeah.
Okay. Well, a heck of a way to pivot. This morning we saw the Fed release some minutes. Of course, we know that their last meeting, there was a couple of officials that were divided on whether to cut by a half. And that's what they did, 50 basis points. Of course, we're finding out now in the minutes that there was even more than we assumed that were kind of for it, not for it. What are your thoughts?
Well, I'm a writer, so I always love good theater. And what you see here is that you got to come up with a storyline, this big debate, everything. But we have a centrally managed economy. That's what people need to understand. This is not a market-based system. I mean, you look at, there's 50 articles a day about what all these different talking heads are saying, and it becomes very crazy. And don't feel bad if you're confused. But what this is they're managing liquidity out of the system from the COVID era, and it's working. That's what people don't understand. It's really working. I mean, don't bet against the Powell guys. I mean, they really have this thing figured out, and so they're going to manage this down, shrink the balance sheet to $7 trillion. The number, wherever they put it, doesn't really matter. It's like they're trying to pull excess money out, but not too much. Yeah. Because then you're going to, so I'm making an analogy tomorrow about how this reminds me of Botox treatments. You kind of like get a certain amount of injection put into all these different places, and you can get resistance. I mean, it's a very good analogy, but that's what's going on here. And so people need to understand that they don't care about you. You know, what they're trying to do is to manage the system and to keep you believing. If you stop believing in it, they're in big trouble. You stop borrowing, stop spending.
Well, then how do we deal with the economy? I mean, has it been more lucrative than you assume? There's a lot calling for that hard landing. Some are calling now for a soft. CPI's out tomorrow. It's expected to rise.
Down. Yeah, I mean, that'll be less than people think. Oh, this whole inflation thing is like people missed the boat on this. You had it early and then it's been coming down. And people say, well, yeah, but the grocery store is so expensive. That's not what they're looking at. You're looking at the pace of growth, and they need that to slow down so that they can have tools ready. Because what you have is you don't have recessions anymore. So recession is 2 quarters of negative GDP growth. Doesn't happen anymore. You have these like panics, these like grab that handle in your car. You only grab that when there's a panic. That's what you do. And then they run to the rescue with the Botox and they shoot you up, and then everything's groovy. So you don't have these recessions. Were times when your competitor went out of business, things got really tough. If you were strong and you had savings, you gained traction. And if you were weak, you went down. That doesn't happen anymore. Howard Marks said it was a 3-week thing during COVID. They couldn't even file the paperwork to start a new fund. Right. So it's you have a panic, a freak out, and then they shoot it back up.
So you're talking about the stimulus that was obviously put into the market during COVID. Some analysts thought, but they thought it was gone. Is it just now starting to run out? Where are we at?
No, I mean, it's reasonable that they thought it was gone because it goes out in different ways. I mean, all these storms hitting and these billions of dollars soaking out of Florida. I mean, these things all calm things down. I mean, talk about calming the real estate market. I mean, everything is no bid on the west coast of Florida, and it has been for a little while because last year it was flooded out as well. So, but you got to give up on like one specific little thing. I mean, what it is that they need this system to stay humming along. And so there was too much money and it was doing weird things. I mean, you couldn't get a nice watch. Right. You know, it was all these bizarre things happening. All that's calmed down. I mean, anecdotally, go to the Rolex store. I mean, you can get a watch now. You can get a watch made of gold or silver or whatever. Look around at all the things that were getting crazy. Now they're calming back down. Now we don't want them to go the other way, because if everybody starts saying the watch is worth half what it was before, it's a depression era type thing, that's a huge problem, because you'll stop believing. Yeah. And the system in the US is all about believing. That's what it is. And people, it's kind of like a stock. Like, people don't do fundamental analysis. They buy the stock when it's moving up. I mean, that's how the US system is. Like, we got to keep you. You notice how, I don't know if in the 80s, like you had these like down periods that were really bad, people got a little bit like edgy. Right. That doesn't happen anymore. Everybody believes. They believe. And they believe in this, like the political process. They believe in all these different things. I mean, like, we have this election. All you got to do is say to people, you're not going to be able to do this thing you need to do. And they freak out. It's like they really charged about this stuff. And we need that, because it means that you're enthusiastically a part of that system. If you start saying, wait a minute, I think there's a group of bankers that just decides what's going on here, things totally bogus, there's no market-based system, then you would quit.
But what do you say to those people? I mean, we have viewers often when we have these conversations, they say, okay, but that's Wall Street. I'm Main Street. I'm still hurting. I mean, is there a momentum side?
Nobody's going to help you. That's what you got to understand. And that's the number one thing, right? And everything they tell you is pretty much bogus, right? So, I mean, you got to think for yourself. I wrote a whole book about gold. I think it's a good book. It's been the best-selling gold book that's ever been written, and it's simple. And people can read that book and understand that, you get yourself a little physical gold. I say to people all the time, like, you don't need much. Say you had 5% of your net worth in gold. And people say, well, easy for you to say. Okay, say you're worth 100 grand, you have 5 grand in gold or something. Forget about it. Like, that's what you have. Your little Bitcoin, you're good. And the gold has outperformed the stocks. Like, and think about it. You feel great about that gold. And it can survive a hurricane. I mean, it can survive a house fire. It's there. The thing is up like 30% this year. I mean, maybe 25%. It's down a little bit now. 4 or 5 times what most of the equities have done. They haven't kept up at all. And so over time, what you're doing is you're preparing yourself for life, like for this journey of life. And everybody's like, has a Powerball mentality where they're like, I want to be reckless and not do any homework and lazy. And then I want to pick numbers that you give me or something and have a life-changing experience. And you're like, does it work that way? Yeah. It's crazy how people don't understand this. You're running a marathon.
I want to get into gold prices because, I mean, you've been accurate. I mean, the last time we had you on, you were saying 23, 24, around the similar times that it did touch that. We're sitting here at all-time high. It seems to be pretty stable. What are your thoughts here? I know that you kind of moved out of the mining sector there for a little bit. Are you still actively involved?
Well, the problem with the mining sector for me, because what people don't understand is I got involved in some companies because I thought they had a great idea. So I put a lot of money in and then slowly was sucked into that, asked to be on the board, all this stuff, which I shouldn't have really done. But I don't really live with regrets either, just to be clear. So I had a lot of money in that, and I sold a lot of stock as I disagreed with management. But what it is that you'll see me get excited about something again. That'll happen. Right. But I'm not excited right now because I'm up here meeting with people and I'm like, you just a greedy guy that's like sitting there with loads of paper. Yeah. And like, what are you doing? I mean, you're not going to get any institutional support. Like, New York knows that you're a clown. And like, why don't you build the company to go up in price, right? The mining business is so small and it's underperforming bullion. I mean, if you had $1 million of the bullion, you did far better than if $1 million worth of even mid-sized mining equities. Right. Now, okay, people say, well, what about Silvercrest got taken out? Yeah, but you're going to get core paper. So the same thing is down. I mean, you got to be, I'm here to make money, okay? I'm not one of these people that has like a promotional company where I have like penny stock and I'm here to, like, I'm buying stock. Like I bought, like the previous company I was on the board of, I bought like 110 times. And yeah, then I started selling when I'm like, disagreed with things. But my point is that like, I'm coming to these meetings right now and I'm saying, I'm not buying this. Yeah.
So
the setup is bad.
Well, due diligence is important even at these.
It's pretty easy too, by the way.
Right.
It's really not. You don't have to be a geologist. Like I wrote a new book called Not for Sale. It's about my life. I think it's something that people should read in this type of market. It explains how I got here. And I think if you have a kid or something, you can maybe understand how to raise them better. I really think it's true. But people don't understand, I'm not a geologist. Like somebody was asking me, well, how'd you know so much about mining stocks? I don't know. I made some money in some. This is a long time ago. There was a bunch of bull markets in the 2000s, and I made some money in them. And I got really interested. I was writing a blog at the time. I started coming around, asking people questions. I don't need to know about like volcanic ash and all this stuff. It's not really, it's a piece of the puzzle, but you can hire that. I mean, you can pay someone to tell you these types of things for very cheap. It's really about being able to understand people and the setup. If you have one greedy person that's not convinced, that's hoarding up all the stock or something, that's unwilling to spend money in the right ways to make the company work, forget about it. I mean, it doesn't matter if the gold price, all these mining CEOs would be like, give me $2,700 gold and I'm on the moon. But you're not. No. You're in the basement.
Yeah. Well, G&A
and then what are you going to do? You got to sell more stock.
Yeah.
So it's like, who's going to buy it? So people are worn out.
So you're diluting your share structure.
That's right.
It's difficult to raise
everybody
capital.
knows it.
Yeah.
Everybody figured you out. Now, I'm in New York all the time. Okay. So like, it's very important to understand that like New York money is not getting involved in the space because they're like, we don't trust it. And we don't trust it because it hasn't performed.
That is my question because, I mean, the space has garnered obviously a lot of criticism, those G&A costs for a lot of these miners. Yeah. It is good reason. Yeah. But with, this crunch that we're seeing in terms of this revolution, this new industrial revolution when it comes to greener energy and what have you, we do need these metals and we do need these 100%. Products. So where are we? I mean, when do investors come back?
Look, I mean, Vancouver is a town everybody should visit, and it's like the sector has a 90s mentality. I mean, they think there's going to be like some little surge, and where's that money going to come from? I mean, we just talked about how the money's coming out of the system. I mean, I have tomorrow's Tucker letter shows charts of this, and you can watch these charts are easy. You can pull them up on the St. Louis Fed anytime you want and track them. I give them away tomorrow, 2 of them. Now, as these are going down, the speculative money is out. I mean, it's coming out. So, I mean, Vancouver needs speculative money to be coming in, and these people are playing for the 90s, and the world has gotten really, really big. I mean, the average Mag 7 founder is like 200 billion or something. I mean, like 200 billion is like every, like non-major company Vancouver started in the last like decade together. It's like, forget about it. So people have lost perspective here. And why is there no support? I mean, you have these, so there will be companies that are able to tap that. And I have an opinion about how they need to tap it. Okay. I think it's actually not that hard. Okay. I don't want to bore people watching this, but there's a way to do it. I mean, I'm in that scene in New York and there's a lack of credibility here. And so you can't just come with like a big wad of paper. And it's just kind of like, doesn't make any sense. But somebody will do it. Somebody will email me after the show and be like, what do we do? And somebody will do it. And it's going to happen because the world needs credible sources of these metals. Yeah, amen. It's coming.
Yeah, it is. Okay, well then let's switch over to the macro. To your point, we have these minor equities still sitting there. Some are doing fairly well, and we know that there's a lot of M&A activity. But then we got the S&P. I mean, we get the Fed minutes out today, and it's sitting here at an all-time high, brand new all-time high. Yeah. So are investors going towards those assets? Are they still going defensive? What's a good balance?
You're in a feedback loop. So people buy in when they go to work. Their 401ks are now, they're no longer like optional entry. They're mandatory entry. You have to like physically opt out. So all that money comes flying in. So if we go into an unemployment situation, the opposite will happen. The index will be sold and it'll be automatically sold and we'll have this negative feedback loop. That might be what causes the next panic, but that hasn't happened yet. I mean, employment's still full, right? So every paycheck, this is what the Fed really cares about. That money is going straight into the market. Now we know it's overvalued. It doesn't really matter if it's overvalued if you keep buying it. That's the thing people don't understand. And so it's like, quit having a fight with these indexes. I mean, it's kind of like you don't own them and you just own like, mid-tier miners or something. I mean, you've really become very poor. So.
But are you buying the dip at these levels on the?
I mean, I think it's a bad move. I mean, I think you got to own some, and you got to own a smaller percentage, right? During these times. Yeah. But like, for example, in the newsletter we have a portfolio. It's called the Trustee Portfolio. One of the stocks that we have in there is like in the food business. I don't want to get into much because it's subscriber only, but. This thing is bananas, man. I mean, it just flies higher. And you start looking at these quick service food restaurants, then below Chipotle in size are still growing. And it's crazy. You're up like 250% this year. And there's more room to run. And you can show that like as it keeps expanding, the business gets better and better and better. And it's dynamic, the growth. And it's like, you're a shareholder. Like the whole point of being a shareholder is to sell the share at a higher price, not at a lower price. Yeah, so this is happening. I mean, it's like, it's a really big deal. And so I think personally, like outside of this stuff that I'm doing in the letter, it's like I own some of the S&P. I do own an index fund. I just, it's not really material, but I do own it. And I think if you don't own it, you're fighting against the Fed. The Fed's going to do whatever it takes to keep this market here. So, I mean, don't bet on radical, like black swan type events unless you're going to bet with like pennies.
Okay.
Does that make sense?
But it does.
Like I mean, we know it's too expensive.
Yeah.
It's too crazy. And what's going to happen is this company's going to roll out and this company's going to roll in and they're going to keep this going as long as they can. I don't know how they're going to.
Well, this is
keep
my
it going
question.
for the long term.
Well, what you're talking about almost sounds like a house of cards, right? Well, I mean, when does it come crashing down? I mean,
yeah, but you got these people are applying paper mache constantly to the facade.
But do you notice that no one's talking debt? I mean, out of all the politicians right now, there's no one talking debt. It hasn't mattered
yet.
Yeah.
It hasn't mattered yet. And so, and I don't know, I mean, the interest expense is now 1.1 trillion. So it's far more than defense spending in the US. And everybody was just freaking out, you know, when it was far lower. Yeah. And it's like, look, it'll matter when it matters. I mean, it could be 10 years from now. I mean, I don't know, but for right now, there's forced buying of all this debt, and there's just more and more. 2016, I said 8 years from now, the debt will be double. It was like 17 trillion then, I think it's 36 today. I'm not actually that smart with these matters. I tried to explain to people, it's doubled every 8-year election cycle since Carter.
Yeah. I always say to the viewers too, that the markets are a lot smarter than us, as it appears.
Gold's doing.
Yeah.
Gold's already walking itself up, you know. So now you're going to consolidate here at 26, 26 and a half, this area, because the futures market controls the gold price. It has nothing to do with buying and selling. And you can get as many gold coins as you want. I put this in the last issue of the newsletter. You get as many as you want. I'm sure you know at Kitco, there's tons available, okay? There's no issue with demand. And people argue with me about that. I'm like, look, go buy 100 coins. There's no problem. They'll sell them to you at spot plus 100 basis points. It's nothing. You can't even run a business off that. I mean, so there's plenty of gold available. So gold will hang out here. The futures market has to keep it here because there's issues if it blows out. Okay. And then you walk up towards 3,000 next year. And it's like that's going to happen.
And 3,000 next year.
I think so. Yeah. I mean, I think it's pretty clear. I mean, the numbers start getting big. I mean, that's only a 10% move.
Yeah.
So let's think about that. I mean, that's really crazy to think about. The dollar numbers get really big. And if you don't own some, you're nuts. Like all these people are gambling on like a little mining over-the-counter side. It's like, why don't you just buy 1 ounce of gold and hold on to it and just check it out?
So the argument is on the spot side, I mean, the physical holding is a lot better. Anything on the ETFs? We've seen a lot of inflows.
I'm not one of these ETFs or a bogus thing people. I mean, I think that they're a trading vehicle. It's not real gold. I do ask people, why would you want that when you can buy? I mean, you can call up, I don't know what Kitco's premiums are now, but I bet they're low. You can call up and buy the physical ounce and never pay an ETF fee ever again. And if you want to sell it, you can, I'll buy it from you. You know, I mean, you can definitely sell it.
You heard it.
24/7. I mean, I'm usually, in fact, I'm leaving here and going to buy some silver coins for my kids, but that's kind of a different ballgame. Right. But I mean, it's the same basic principle.
Silver been surprisingly, resilient to these levels too. I want to get your kind of macro overlook of 2025. It sounds like liquidity is still going to be in the market. That's what you're saying. And you think this thing's going to keep running this year? Do you think it'll be?
It doesn't. I mean, that's the problem. But I'm not one of these bet on.
Yeah.
What I do, so people understand, is when I think things are ridiculous, I'll lower the percentage that I have there. So if I was managing my own average 401k, I would dial back the percentage a little bit. I would not be short because I'm not going to short a guy that's got a multi-trillion-dollar printing press and Triton missiles all over the world. I'm not going to short that guy. Like, there's no point. I mean, and while some people say, well, one day it'll collapse, well, I might be dead. I mean, you know how long this could take? I mean, or of course it could be next week, but I don't think it will be next.
So you haven't changed many allocations in that kind of diversified portfolio?
I pull them back.
You've been taking profits?
I pull them back. No, I put less. I lower my percentage, and then I'll use money. I see, for me personally, there's a lot of stocks that are below that top tier threshold that are very interesting, and I'm writing about some of them in the newsletter.
So I want to be one to the audience.
I want to be careful because it's the people below the paywall are, they mean a lot to me. So, but what's been happening is some of the SPACs worked. And so they're getting added to the Russell, these stocks. They're making money.
The SPACs?
Some of them work.
Okay.
Some of them have warrants that have, 4 or 5 months left. Last week, I had a warrant I was buying for 2 months. It's a cash conversion warrant in the US exchange, and it was trading at a massive gap, like an 80% gap to value. And I sent the warrants in. That'll be next issue. I'm going to show people how I did it, because a lot of these things had warrants that are lingering, and they've lost attention, and the speculative investors are gone. But it's a real business. It's a real business, and it works. And so
it was the flavor of the day there for a while.
Correct. And so what you do is you got to sort. You got to sort. I mean, I do that for you, but it's like you got to sort it out. It's not that hard to do. But all these people that were betting on these things are gone. And of course, some of the SPACs, like I worked for a company that SPACed, and it did nothing. I mean, it was like it's 50 cents. But
a lot of investors had some challenges with
definitely,
SPACs.
yeah. But all these SPACs had warrants. And if you had a real business blow, what you saw is that it went down with everybody else, and then it came back. And then it got added to the Russell. And once you get added to the Russell, then you have all this ETF money coming in, and it's just buying it and buying it and buying it. And so anyway, so you'll see some of these charts. I mean, like one just that's not in the letter, but it's interesting is RAIL, R-A-I-L. So I have a friend that's pretty high up at this company, but you saw that it just kind of like got drilled with everything else. Right. And then all of a sudden, the business is doing well. It's a small company. And then it gets added to the Russell, and then the Russell has nothing to buy. There's nothing to buy. Yeah. So it's just the Russell's grabbing for stock every day.
And the small caps continue to perform in this environment?
That's the thing. And so it has to be a real business. It has to make money. It has to fit the Russell metrics. And then you start seeing, wow, I mean, there's not just one of these. I mean, there's Perimeter Solutions, for example, that fights forest fires with a patented foam, that orange foam that drops out of the place. There is no other company. Like, that was a SPAC, right? So you see, but that's a real business. That's not like some ridiculous idea that just went nowhere. And so people need to understand that, like, these are the companies that are being indexed. So you're playing that, and you're not playing like the top of the index. Yeah. It's like, you got to have a little bit of that, but I mean, like,
and the Russell,
not very exciting.
And the Russell 2000 has certainly done quite well this year.
Index.
Yeah. Okay, before I let you go here, I got to ask you, we just talked about those Fed officials being divided on 50 basis points. CME FedWatch tool right now towards November is calling for 25 basis points off. Yeah. Are you in the 25?
So people need to understand there is a massive amount of money at risk in this rates market. And the way it works is that nobody's like buying the bond. What they're doing is they're buying futures, and then they're buying options on futures. And people already are probably lost with what I'm saying. But I want you to understand that, like last week, I was with Druckenmiller at this small event. All these people are doing this, okay? And then,
but explain a little bit what you're...
All right, so what happens is you take a bond, you get a 30-year bond, and then that bond, nobody really buys that. Maybe an insurance company or pension buys that bond, but nobody really buys that. What they do is that you have futures. You have bond futures, and the bond futures are what pull the bond this way and that on price. And then the futures are if you've never traded futures, you've really never lived until you've traded futures.
Very
it's
volatile.
Quite exciting.
Yeah.
You're up all night doing this stuff, and it moves rapidly because you're leveraging, with a high rate of leverage each tick that happens. Then you can have options on the futures. Now, that's taking the 10, 12x leverage and applying it again. So, I mean, you're really getting crazy. And so this is what people do. They use an algorithmic model to bet this way. And so why the Fed comes out and has people talk expectation, and then you'll notice next week, well, maybe we need 50. Well, maybe we need 20. Well, maybe we don't need any. Well, Waller says we don't need any. Well, Jefferson says we need to. This is all a game. So this is like a PR game. And what it's designed to do, you don't see this, but I'm on a Bloomie all day at the office, is that it radically shifts in a nanosecond, and all that premium goes sunk to zero. And then somebody who's on the other side, it's this way. And so the Fed has been working it like this. I call it dizzy bat. They've been working. Let them work it, okay? It doesn't really matter. The yield curve is still inverted, and we have a problem until it corrects itself. And I don't think that's a good bet even for myself. I look at that and I just say, I can tell you where it's going in a year. It's going to go from inverted to sloped.
Right.
It's going to go there, okay? They're going to get it there, and they're going to manage it there, and they're going to try to get it there without breaking anything and without having you freak out. See, if there's bread lines, people wig out and they start killing each other.
Or jobs.
That's right now still not a problem,
Yeah.
right? I mean, you don't hear people
we are
say,
seeing
well,
these revisions.
of course we are. Yeah, I mean, there's definitely turmoil in that market. You talk to regular people like that work at regular places and they'll say, yeah, I mean, it's not good. Okay, but that doesn't really matter that much. Okay, it's kind of like people always make suffering down into this like, it's like when you and I are here today, they say, well, easy for you to say because you're rich. It's like, well, not really. I mean, sure, but like, it's not like an accident that you can't just have a Powerball mentality of like, oh, well, easy for other people to say, I want my answer right here. It's very important that you realize that like the Fed doesn't care about you. So what it cares about is stability, so that it can continue managing the system, so that private equity payouts can happen, right? It's like, well, that doesn't have anything to do with you, right? So that where does Powell come from? Carlyle Group. It's like, come on, who butters the bread? You got to understand how this system works. And so they got to get this money out without having a major panic. And you've had a few, right? Remember, it was banks fail and all this stuff go on, and they Botox this thing back together. So that's what's happening. So you're going to get more of that. So I wouldn't buy into the 25, 50. I know all my friends that are pros watch this CME tool all the time and place all their bets on it. And then Jefferson will come out and say, no, I think we're going to do this. And Judy Shelton says, or what Trump's going to do, he's going to be on the Fed, okay, whatever. It just is, it's a game. Yeah. And if you have to bet, just bet the opposite of whatever's hot today, because tomorrow, whoosh, it'll switch back. Yeah, and you got to be short term. You cannot, if you're going to play this game, you cannot be betting for next year. Right. Like I know where the curve's going. You can't make that bet because you're going to get washed out in the meantime. And every time that happens, the switch sides, like a ship or something. Yeah. The Fed gets more of what it wants, which is premium lost. That premium gets spent. All this money gets spent in the market. And so don't be the spender. I mean, if you go spend the money on yourself. Yeah. Right?
Be the saver or just take.
Or enjoy.
Or take 4.05 on a 10-year treasury bill.
That's suboptimal use of cash. I mean, I would encourage you to just spend the money. Yeah. But nobody spends money. I do want to tell you this. Like, I'm always surprised at rich people that I know that are so concerned with making more money. It's like, why don't you just spend the money? Yeah. I mean, I play tennis all the time and I travel and I play wherever I am traveling and I get lessons and I pay to play in live ball groups also. And I'm like, go get a hobby. Like, I mean, Druckenmiller was last week. He loves winning. He's like, the only thing I love more than winning is not losing. I'm like, what's wrong with you? I mean, I know you play golf. Maybe you're tired of playing golf. Like, do something. I don't know, like have some more kids. I mean, I don't know what to tell you. Like, you can't, it's not, at some point you got to live. Like, do the things you want to do, even if you're at a small level watching this. Like, it doesn't take a lot to go drive 2 hours with your spouse to go to a hot spring or something. I mean, have a good time. Like, it's going to be over.
Well, I mean, we got lots to get to. Obviously, we got that CPI number coming out this week. We got more information coming from the Middle East, what's going to happen with those geopolitical tensions. Unfortunately, all the time we have in studio. EB, all right, you got to come visit us again.
I hope so. And, not for a hurricane escape.
Not for a hurricane escape. And I will call you out if this goes the other way.
Let's do it. All right.
Thank you so much. I'm Jeremy Szafron for all of us here at Kitco News. Thank you for watching. As I mentioned, lots of great content coming out this week. Next week, hit subscribe, like this, and we'll see you next time.